Welcome to today's event where we have the pleasure to present Audientes. To help us through today's presentation, we are joined by you, CEO Sten Thyssen. Today's topic, of course, your Q4 year-end financial reporting, but I think also the massive news flow we have actually seen on new markets, new partners, and a little bit on the capital situation sent out during Q4 and also in the beginning of 2025. So that will be the topics for today. As always, you're very welcome to ask questions in the box down below. Also do it in Danish, and I will translate to the best of my ability to English. But for now, I think I will hand the call over to you, Sten.
Well, thank you very much, and welcome to everyone who sees this in real time and at a later stage. As you said, this is the Q4 year-end reporting, and of course, we'll take a good walk through the business progress and basically what we are looking into here in the year to come as well. We have, as usual, a comprehensive sort of set of topics, so let us dive into it. For those who may not know Audientes already, we are a young Danish company, an innovator in personalized hearing solutions. Our focus is within the hearing aids and advanced hearables markets. Our, you can say, specialty is addressing needs for kind of self-fitting products, basically where you can buy them in a street sort of a merchant or in a pharmacy and immediately take them into use as you come into your home by running a simple test and get a sort of instant alleviation for hearing loss. That is our key focus area and has been that for the 10 years we have existed. We are listed at the Spotlight stock market in Denmark, one of the smaller exchanges where various technology and medtech companies are basically located. We have subsidiaries in India and Japan, and we also have a joint venture in China with our local distribution partner for the purposes of creating products locally for the greater China market. We have two parts of our business today, really. Let me start with the most recent first, and that is the software platform licensing. It's basically the asset we have created in the last couple of years. We're using that now to engage with OEMs and brands in around actually creating products that they will take to market and have manufactured. So basically, it's a different model, you can say, where we are not necessarily the party that has to do everything from start to finish. We are helping with our software and hardware designs, creating essentially products that will be, for example, produced at a factory by a specific manufacturer and marketed by the brand or the OEM. Our original model is the product sales. So basically, that's where we are, you can say, involved from start to finish. That's how we have created our initial products that we are basically today in the market with. And our target users are really the ones that kind of need a solution that they can take into use by themselves and not necessarily have to go into a specialty outlet to have it fitted and all those quite cumbersome steps. So basically, a quick look at our software kind of platform here for own products and licensing. Today it's a comprehensive end-to-end solution consisting of the software that is embedded in the actual product and the smartphone app that is used by end users to gain additional kind of access to features and running the hearing tests and so on. It's not mandatory, but it's something that we today know most people really like to have that feature. They can get a better representation of their hearing loss and so on. We're using the industry standard NL2 fitting algorithm used by professionals, and it's essentially something that is built into the product. So all our fitting and so on is being done in real time. So no need for external machines to actually put in settings and so on. We're also offering remote diagnostics and fitting in the product platform. So basically, an expert can actually help guide a user remotely on how to set up the product. We also, you can say, when we are delivering these items, of course, it consists of the firmware, the actual smartphone app, and of course, reference designs that can be adapted for different form factors. And then one of the new items in our business model here is also services that helps end users, kind of in this case OEMs, actually create the products. So we call them NRE for non-recurring engineering services. Today, our portfolio consists of the Ven hearing aid product that we market in India and Nepal in particular, but that we are working on introducing in other markets. And then also we have the companion hearable, which essentially has many things common to the Ven product, but it is a consumer electronics device that we are marketing in Europe, in Japan, and in China. And of course, we are now introducing that in other markets as well. Our future, you can say, direction for the next product we are making is a more conventionally designed hearing aid in the kind of RIC, which means receiver and canal type of design that essentially sits behind the ear and has the sort of loudspeaker going into the ear using a quite sort of thin wire. That is the most dominant design in the industry today that sells by far the most products. That's why it's interesting for us to move in that direction. If we look at sort of how we sort of map competitively, we're trying to sort of depict on this illustration where we are. We know that there's the very large existing manufacturers of high quality and quite expensive hearing aids. There's a whole new market, you can say, that is unfolding in the OTC space with a number of brands selling, you can say, significantly less costly products, but that only goes up to around moderate hearing loss in the US, for example. And there's various hearables like Apple AirPods and so on that are being equipped with so-called hearing aid software features in some markets, and that's essentially that category. They are not really of any use for people that has a severe or profound hearing loss. They need much more tailored solutions. Our experiences from having been in the market now for a couple of years is that people who really has significant hearing loss in countries like India and China and so on, they are not helped by those type of products, but they need really the kind of the high quality, high powered hearing aid solutions. And that is why we are kind of trying to move up in that segment now with this move, so we can also participate in that particular business. Today, our Ven hearing aid works up to around sort of moderate to severe hearing loss, and essentially it's a good fit for a lot of people, but not for those with very kind of profound hearing loss. And we like to move further up in that field. That will really benefit our business. So that is kind of why we are, you can say, playing both in the OTC kind of self-fitting space, but we also in the expert assisted fitting area where we need professionals to help configure the products for end users. So today we are supporting both the self-fitting segments, but also the kind of where you need an expert to fit. That is sort of part of the kind of market requirements. So just very briefly here, the go-to-market model we are sort of seeing in many markets is where we engage with a distributor. Of course, if we have our own subsidiary, we can also go direct to the end user in a given country, but otherwise, a lot of what we do is working with partners on addressing certain go-to-market channels. In Japan, for example, we have a distributor called TD SYNNEX, a very large global technology distribution company, and they're helping us basically go to market, for example, on e-tailer platforms and with various other retail channels going forward. But right now in Japan, for example, we're working a lot on getting the readiness around the e-commerce, which we think is a great channel in that market. And essentially, this is how we're doing it in many markets. And we also have our own web store that we're also using as a way to sell into sort of certain markets. But let's get back to kind of the topic for today, Q4, and actually the year that has just gone. We did a lot last year in growing our market presence, and that is of course because we needed to really branch out from India and really address the opportunities we have been working on, really kind of getting ready for with our local partners. And it has taken longer than we had anticipated. I would say, in fact, most of last year went with actually getting the go-to-market readiness in place. But the great thing was in Japan, we managed to actually launch and deliver companion products to market, fully localized units. And we did that initially through a crowd-based marketing program. The idea was to expose various, you can say, segments to this type of product and really gain some experience on how to market this more broadly later. So now, moving into the e-commerce space, we've got a lot of early learnings now to use, and we will see where this will take us. But Japan, of course, is now fully operational and has product in the market. And now this year, we really expect quite, a lot more from this market than we did last year. In China, it's the same story. The whole marketing ramp up for Xigenu, which is the localized companion that is selling under a local trademark name. That essentially has been also getting ready for, you can say, getting in the market, getting units out there, and then you can say really starting to build that business is also what this year is about, building on what was achieved last year. We have got a quite significant commitment to Hengtong for units that they will basically go out with and broadly develop these different channels that we just looked at as well, similar to those in Japan. The sort of new thing and this year really is the sort of Ven hearing aid is in process for getting the medical device development process completed, which means that making some enhancements to the actual product, getting the local NMPA approval, which is medical device approval in China. And so we actually expect this now to be able to enter sales in 2026. And of course, in India and the MENA region, we announced earlier this year in a new partnership with Audientes, a Turkish-based company selling products into various markets in the Middle East and North Africa, as well as Eastern Europe, and the kind of the Asian part of Europe. And essentially, this is something we are now building together with the partner. It's a young company, but consisting of very experienced industry professionals with a great network. So we are now really trying to get the early orders in place and getting out there. They have significant ambitions on our behalf with the solution we have today, and of course the ones we are coming out with in the future. We also continue in the dialogue with Simply Teeth in India, which is a partnership we made last year, and we have some quite interesting discussions that we are hoping to really see bearing fruit this year. In Europe, of course, we have now appointed Stefan Lundström as a European Sales and Marketing Director, a great guy with a lot of experience in this sort of health and kind of well-being area. And now we are really targeting these channels that I think are new to us in Europe, so kind of like pharmacists, opticians, as well as various e-commerce vendors, as well as planning and executing on this regional Amazon launch already in this quarter. So this is something you can say for us, there's just a lot of things to sort of work with right now. Last year, you can say our revenue targets were sort of adjusted during the year. So we had expected to reach 1.5 million in turnover, and for various reasons, we did not make exactly that. A lot of it due to timing and go-to-market readiness in reality. But what we did achieve was a combined sales revenue of around 840,000, and that is consisting of product sales and services sales, as you can see here. Most of it, of course, is product sales, and it'll also be the case in the year to come. We, of course, expect to exceed this significantly in the year 25. But I think for us, it was really getting out in the market and actually being present in these new markets that was kind of the main accomplishment as it comes to sales last year. We did keep within our latest guidance for EBITDA, and I think that's also an expression of the quite efficient organization we have. We have reduced staff costs significantly, but we've also been very efficient in other areas, and essentially investing, of course, in areas that are critical, but also you can say we could invest a lot more, and most likely now starting to also reap the benefits from that. But for last year, it really was about curtailing costs and you can say being really frugal on what we were spending on. But this is essentially the result of the year. It's an improved kind of profit and loss for the period 24 compared to the year before and so on. And I think that is what would be expected as well. The sort of loss incurred, of course, has also this effect that where the equity from the beginning of the year was around 1.2 million at the end of the year was 1.2 million it sort of had decreased from around 4 million in the beginning of the year, and of course in the end of 23. So we sort of, you can basically conclude that we have to sort of reestablish the actual equity, which we will do through various funding initiatives and of course generating future profits. We have done some of these things during the year. We have done various forms for capitalization events, and of course we can just take a look at that as well. What did we do last year to basically strengthen the balance sheet? We did a couple of things. We did a rights issue in Q2. We did a directed issue again in Q4, and the sort of debt conversions we did along the way on several occasions that really was to convert existing loans to equity. So we did not have to repay it, but of course it also has meant that our number of shares has grown. But it has removed debt, and I think that is important in our business as well, that we don't have too much debt, because it has to be serviced, of course. So our plan this year is ideally we are going to focus on non-dilutive financing, which basically means kind of the bond issuance that we are right now working on executing on for the coming month. It's essentially something that I think will benefit us tremendously if we can secure the targeted around 50 million Danish, which is the 2 million euros number, at this beam market in Bulgaria, together with our financial advisor, MK Brokers. This will really help us a lot with the right amount of funding to invest in go-to-market and, of course, further product development and maintenance. That's the sort of key for us right now, really to go out there and being able to invest in selling products as well as preparing for the future. We are, of course, investigating other loan-based financing, and we will also, of course, not rule out any further directed issues, because it's a way of also bringing in funding, you can say, with a sort of quite simple and easy approach. Further rights issues, of course, will have to be considered, but it's not currently part of our plan. Looking ahead in the coming year, I think this is essentially where we have this strong market presence. We really need to execute on that and all the opportunities we have. So we expect increased product sales compared to last year. We will derive some licensing revenue, and we will also see product creation services growing a bit. And then if I sort of just look at the sort of what are we talking about when we talk about licensing revenue, that is really related to basically us providing license to our software and hardware platform against a fee. And the initial part of what we expect to see of that is this fee that essentially is being charged to the joint venture as part of our involvement in that. So there's around 600,000 Danish kroner that is figuring in currently that are expected to be capitalized in the coming year. And then there will be some services for product design development, and of course orders for existing products and also the new ones that we are working on. We will see, of course, we haven't come out yet with our guidance for the year, but we are working on that, and we just need a bit more time to really solidify various assumptions and anticipations. But we are quite optimistic about using 25 as a way for this path to profitability that we really expect in 26. So essentially, breaking even on our operations is our key goal. We will, of course, continue to focus on selling what we already have made, but it's also important to prepare for the future. That is why we are focusing on the next generation products. And as part of our licensing model, we're really looking to do that together with partners. So we don't have to necessarily procure funding to do everything, including production and go to market. We really want to work with our partners on that part. So we think by doing that, we can actually quite quickly come to a point where we are sustainable as a business in the next couple of years. So just sort of summarizing everything that I've been sort of saying here now, that the reasons to invest in Audientes, really, I think there's at least 6 very good reasons. And the first one is this innovative and expanding product line that are now available in a number of markets around the world. I would say really important markets, lots of potential, very large populations, and of course we are now out there together with local partners, really trying to make the most of that opportunity. So we think we should see solid growth coming from us being present in those markets. So we'll take it step by step, but our aim definitely is to be profitable in 2026. The new business model with software licensing, I think that has a lot of potential in its own right. It is not necessarily simple and straightforward to do these things, but we have basically experience in that field from past occupation. So we understand the area, and we also understand what it means working with partners on creating products. Our self-fitting technology is actually at this point in time quite mature, and it's being used in both Ven and companion products. So from a go-to-market and sort of technology point of view, our company is quite at a very good stage. We have de-risked the whole technical issue tremendously now, because we have been out in the market now for a couple of years with products that are essentially doing what they're supposed to do. We do believe that we need to look towards the new form factor for us, which is the classic behind the ear. We think that has a lot of potential for us in markets like China and definitely in India, based on all our feedback so far. So we think by executing on these opportunities, we have a good potential as a company to actually be a significant new actor in this field of hearing aids and hearables, especially those that are designed for markets where price and accessibility really is an issue. So we have that in mind each time we are looking at what we should do. And I'm just sort of here to the right of these 6 points showing the actual box designs for the 2 localized products of Companion. So the top one is for Japan, and the bottom one is this version of Companion called Xiying Yu that is marketed in China. So with those words, I would like to say thank you very much for listening in, and look forward to receiving any questions. Thank you very much.
Yeah, perfect, Sten. Let's jump into it. There's a little bit about the acknowledgement and the current products on your stock that you have in your warehouses. Are they unsellable, or you might say, are they worthless as the technology goes on, or can you do anything with them, or are they already committed to some markets? So I think, did you have around 3 million on your stock of products? So a little bit of comments about what you have in stock and whether they get obsolete at some point in time.
Of course, they could get obsolete, but the fact is that we have been continuing to upgrade the actual software that are in the products. We have been, you can say, going through them each time we are localizing products to new markets. We are doing some packaging changes, and then we are testing all the products and verifying that they are in good and sellable conditions. So I think right now we are in a good situation. We expect all these products to be in the market during this year. So I think for us, we're quite comfortable that this stock has kind of got the value that the market would expect. And the quality, of course, it's very good. So I think the coming year will see us really manufacturing new products for these markets. You can say from scratch, essentially using the same chipset and so on, which was a quite modern chipset when we started. It was a very recent introduction from Qualcomm, and it's still a good chipset. I think for the coming product, we are looking at the receiver and canal product. Of course, it's not exactly the same chipset, but it is in the same family. So I think we're building on what we have done already.
Perfect. Then there's a question. The launches in Europe, you mentioned, I think Amazon and so on. Are they dependent on new capital, or is it primarily driven by some of the partners you also have gotten this year in the European?
Yeah, it is not depending on new capital as such. Of course, you can say Amazon is sort of a company that has got presence in a number of markets in Europe. So what we're doing is introducing the products to these stores with a local partner that already has the presence there. So we don't have to, you can say, build everything from scratch.
Okay. Is there any guaranteed revenue in the deals you made with Simply, JT and Audio Vista?
No, you can say when we make these agreements, there's always what you would call a sales target, that basically sort of like a minimum committed revenue and so on. But I won't call it guaranteed. That's why we're very careful when we are talking about this. But again, people are asking us, how big can this get? And then we have to refer to what actually, you can say, the expectations are. But we're not calling it guaranteed. So guaranteed is sort of one of these things in this world that is very few things are guaranteed. Yeah. Unless you have received the cash. So that's also why we are very conservative in terms of when we recognize revenue now based on past experiences. So when we take something into our books, that is generally because we have received the actual payments.
Check. Are the expectation later in the year you could give 25 guidance, or are your guidance now to market that you are going to profitability in 26?
No, I think I mean, people really would like to understand what are we expecting within the coming year. I know that we are working on that right now. We are trying to solidify the different assumptions and building sort of a plan that really also fits with what we are looking for in terms of the coming funding. So these things have to fit together. So our expectation is that we will come out with something in the near future.
Perfect. Then there's a question: have you been able to put something in your books from the Japan campaign, and is the campaign started, and how does the sale look here? So first, have you been able to put something in your book, in your revenue? Is the campaign started, and how are the first impressions of this campaign and the sale?
Well, I think yes, we have been able to put I would say a bit in the books from last year from the campaign in Japan. I think it was sort of really ran and sort of brought in revenue in December. So you can say a lot of what will come from Japan will actually fall in this year. What I think we have learned, and we spent a lot of time preparing for providing good customer service in Japan with a call center and you can say electronic responses and local website and all these things. We did a lot of preparation, and Japanese consumers are very kind of very focused on good service. So I think that is our learnings so far, and otherwise I would say the feedback we're getting is that a lot of people like this form factor, and this is kind of one of the things that we have been, of course, very keen on getting to understand. But this market we're going for, it actually seems to be a good fit. So we hope this will be essentially, you can say, the ground for a lot of positive development there in the coming year. But I would say that the bulk of the go-to-market in Japan now is going to happen in this year in those new channels and in various partnerships that we are working on developing.
Perfect. Then there's a question. I know we are early in the year, or we are almost out of February. Can you give some indication of your sale out here in 25 without breaching any rules on governance?
No, not at this stage. I think we are sort of really focusing on as I said, coming out with a combined realistic outlook for what we expect this year. So we will take a little time to get that sorted, and then we will sort of communicate it.
And perfect. The last question: have you been talking to any potential bond investors yet? Have you had the first talks or anything with any of those people yet?
So the way this works is that we are not talking directly to bond investors as such. This is our financial intermediary who has those connections, and of course they have been sounding out the market, and that's why when we are sort of engaging with them, signing a contract to pursue this, and this is sort of part of the process. Of course there will be some local marketing and communications around it, and part of what we are working on, you can say, with this financial reporting process, of course, would be part of that whole sort of process. Yeah, we are quite excited about that. I think it's something that is the right type of instrument for us. A company like us, young technology company, presence in many markets, and I think that type of funding for us would be extremely beneficial. I think people have been wondering, and asking why, are we pursuing this kind of model? But it is essentially that it's something that has got all the hallmarks for something that for us is really good, and of course for our shareholders.
Perfect. That was the last question. Thank you, Steen, for taking us through your result and your achievements, both in the end of the year and into the new year. And thank you for the audience for listening in. May everybody have a nice day.